The Hedgeless Horseman here again. This is the second video of today, August 17. I didn't have time to go through the some company news because I ranted too long as per usual. Anyway, let's dig into it. So this week we got news from Western Alaska. Western Alaska Minerals extends mineralization at Water Pump Creek. Here you can see some of the results. This is from hole 0030. Cumulative 71 meters of multiple high-grade zones. Unfortunately, they don't put it in AG equivalent. They're too professional for that. But it's, let's say, high-grade. I think maybe, I was going to say maybe someone did numbers in the chat, but it's like obvious high-grade. I mean, this more than pays, I would think, for the silver. So basically, I wouldn't be too surprised. I mean, just these grades alone. I mean, 11% lead, 4.5% zinc, 20. Well, this is including, I guess, but it's obviously this should be extremely profitable. 24.1% lead, 3.1% zinc. So it's around 25% lead zinc alone, and then you have high-grade silver as well. I mean, this should be a money printing machine, this kind of mineralization. Extend the VPC system at least 45 meters down plunge. Extend VPC system to 495 meters in total. And they have, the big thing, well, the first big thing at least, is obviously the last hurrah, the Anaconda's last hurrah target, which appears to be an offset continuation of Water Pump Creek. So it's hole 5 that hit telltale signs of, let's see if they have, yeah, so this is hole 5 that was drilled here. Here you have, what's been drilled kind of so far. And again, I've talked to, I know one big shareholder who believes there's around 100 million ounces AG equivalent already in just this little thumb up here. So, I mean, the blue sky just on this east side of the Water Pump Creek or Illinois Creek project should be pretty obvious. And this is where they think hole 5 hit. That they are very close. I mean, all the telltale signs of a CRD finger being in near proximity. So I think the odds of there being a CRD continuation here, I think that's very high. Probably, I don't know, I mean, I can't tell for sure, but it's like probably over 50%. And I think the distance from here to here is like 700 meters, and this has been extended to 495. So it's like, it looks, I think, likely that in time this is gonna at least double, then it might triple, and then it might, quadruple. So if you have 100 million ounces around here, 200, 300, 400, etc., 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 is that a guarantee? Nope, but it's priced at 102 million. I know, for example, Silvercrest ran up to 2 billion on around 100 million ounces AG equivalent. They're in production though, but that's in Mexico and has some problems in that respect. But it's like, in terms of growth potential as well, I mean, it's hard to beat an intact CRD system, I was going to say. So I mean, this is just one of those cases. It's like, if you just look at the fundamentals in this case, and the price. Okay, over the next 6, 12, 18, 24, 36 months, etc., do you think Western Alaska will probably increase in value or decrease in value? Do you think Western Alaska might look cheap? Even if, let's say you throw in a 30% dilution here. Just for shits and giggles, I was going to say. Let's say, raise 30 million, 30% dilution. Oh, dilution, 130 million market cap. is 130 million gonna look expensive compared to, you know, what this slide suggests? And not only that, but yeah, so they're up here now, I was gonna say, and this is the last raw target. This is an entire district, and here you have, well, this is the, where's the gold mine? This is the gold mine. CRD drill targets. All of this is a target, this is a target, Last Hurrah is obviously a target, still open, might be open that way. So if you have 100 million ounces AG equivalent from this thumb here, yeah, I mean, I was gonna say, I mean, and we know, I don't know if they have the slide anymore, but like these CRD systems can be huge. Some have been mined for like, I think hundreds of years or something. So yeah, I mean, I think maybe this is not enough yet to have like a, you know, warrant building a high margin mine just yet. Maybe that's, you know, mine life would be too short potentially. If we just find Last Hurrah, maybe this is $1 billion mine all of a sudden, and that might be, it might be much more than that. Plus you have Round Top and TG North. I think this is the one where this might be another porphyry and CRD system. And then you have Honker and stuff, but that's obviously a sideshow until, I mean, this is obviously the low-hanging fruit, high-impact exploration. But this is all you get on top of that. And these are really, really good explorers. I think management owns, insiders own like 30% of the company. They have Peter McGraw, yada, 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 most well-known CRD expert in the world. So, I mean, how much precision do you need? It's like, okay, 102 million. You know that just adding Last Hurrah, probably, and Last Hurrah looks larger than what they drilled so far. You know, might it take some time to find it? Sure, but it's like, if you're drilling this kind of stuff, I mean, what's this worth? This is license to print money, I would think. So it's like, is there a guarantee? Is this for sure going to be a 1-2 billion plus system within 2 years? No, but I think it's a pretty good shot of being that, and in that case we're gonna probably have a 10-20 bagger. It's like, how would this really fail? I mean, that's basically that. That would basically be that this is all there is, even though the source is believed to be here, and obviously here you can see the world-class CRD systems. And I know Tintic, for example, I think Ivanhoe Electric with Robert Friedland are drilling for the porphyry, which would be the source. So these fingers and stuff you see here came from, you know, a porphyry source. Oh, here you have 300 years of production, 51 million ton, 300 grams per ton silver, 8.2% lead. I mean, I don't know how much wealth. What is this? Is this Santa Eulalia? Yeah, I think it's Santa Eulalia. You can just wonder how much wealth this CRD district has created, and this is even higher grade silver. The scale is the same as well. So I mean, look at this. They've drilled this. This might be possibly around 100 million ounce AG equivalent. That's like this. And if the source is here, there should be CRD pathways that took mineralization all the way from here up to here. So because the mineralization here that originated here did obviously not jump here. So it's like, yeah, the distal parts, the possibly the end of one finger is what they've drilled so far. I mean, this is one of the most obvious, I think, growth hodl stories. And today there's a market cap of 102 million Canadian. What would these be worth? I don't know, billions of dollars. Do you need to know for sure that they're gonna find another Tintic or Santa Eulalia if you're paying $102 million? No. I think this is being kept in the hodl portfolio. I don't care about market crashes, corrections. I don't care if it, who knows, let's say we have a market crash, it goes down 30%. In that case, I don't know how much I would jack up my position, but this is one of the best exploration stories I know of, because the blue sky is huge. Probable growth is, probable, again, given that, hey, they believe if last hurrah, let's say, if this is needed for it to be, reach the critical threshold for banked success, AK, you kind of have a mine. That looks probable. There's probably over a 50% chance that they will actually, find that, I think. So in that case, that would be a 50% chance that they have a mine. And that's, then everything else is kind of, for free. So huge runway, obviously. Again, 300 years of production here. Huge runway, legendary districts, cheap to start off with, growth looks probable. What else do you need to know? And management team is solid, huge skin in the game and all that. There are not many cases like this around. This is one of, it's like I'm going crazy just seeing all the cheap, high quality juniors out there. Because it's not only Western Alaska. There's other companies I want to increase my stake in as well. And I don't have money. So in that case, it's like almost, I was going to say up to, volatility. If this would get 20% cheaper in a market crash or something, maybe it's a, 200% better buy or 100% better buy or something like that at least. But yeah, it's just, and if I had to guess, I think it's like, okay, because everybody's short-sighted, they haven't hit the bullseye at last hurrah yet, and in this sector you don't pay anything for the potential. You don't really pay anything for the bankable success already. That's why the bets are so asymmetrical right now. Imagine it's like somebody, hey, they probably are close to the continuation. In that case, let's say there's a $1 billion mine here, and at face value the stock is pricing in a 10% chance of that happening, and that's only let's say from adding last hurrah, which looks again like that's probably going to happen. The bets out there are just wild. Goliath had a market halt, and this might be maybe the best intercept so far. 23 meters of 21 grams per ton AU equivalent, including 14 meters of 33.75. Given that the metallurgy looks very, very favorable, this would also be a, license to print money. This kind of mineralization, at least. And like always, the amount of data is typically a lot. Again, this is kind of like Western Alaska. Growth is probable here. It's a very like CRD system. Yeah, those might be tricky to find, but they're not nugget in a sense where a lode gold deposit is nuggeted, that the source was let's say a planar source, 3 kilometers of upwelling, and some places they deposited gold, some places they did not. CRDs is more like it's eating its way through, so it's mineralized all the way to the source, with different mineralogies up close to the source, where you get, I think, more copper and gold and stuff, which is why you have the where is it? Anyway, which is why you have the Illinois Creek oxide mine with gold and a bit of silver. Here's like Golden Gate feeder zone. Here is where they hit, I think this is the Bonanza hole, and you can see here visible gold observed in core. That's the one that are kind of lit, I think. Yeah, kind of lit. So a lot of visible gold in this area. Remains open there, remains open. And I think Quinton said that he believes, was that? I have to re-listen to the Crescat presentation where he said that he believes some hole here hit the continuation of the shorebed zone. But then they have, last news release they talked about a bunch of other additional targets. So who knows how big this might get. So it's I see it kind of like Western Alaska. Probable growth, that's for sure. This is one of the most, I guess, predictable systems I've ever seen. They have, I don't know, did they say like last news release, 14 additional targets or something. Here's the current model. This is, I was going to say theoretical, but obviously you don't pay for this. And I just did some numbers where you have like, where do you have? Here you have shorebed zone. If we just plug in those numbers, that's around 3 million ounces here at 6.31, 3 million ounces here, and that's just from the immediate shorebed zone. Shorebed zone area. They have a huge land package, and the other news release talked about a bunch of additional a bunch of additional targets beyond that. Humdinger zone, outpost zone, full house zone, yada yada yada. So it's like, again, just to wrap up, it's like growth probable. This looks, I think this is going to be a mine, and there's a chance that this area alone is like, I don't know, 3 to 5 million ounces perhaps, maybe more than that, and then they have all the other targets. So who knows, this might be turn out to be I was going to say multi-deposit story with like 5 to 10 million ounces, given enough time. And the price right now is 70 million Canadian. So yeah, kind of like Western Alaska, banked success, getting closer and closer to reaching the critical threshold. I think reaching the critical threshold, meaning okay, you have a mine. I think that's I think that's looking increasingly likely. And again, blue sky potential is very large, and 70 million Canadian is priced in. So let's fast forward the tape a bit. Give these guys 2 years of additional drilling and a lot of target testing. So maybe let's say 2 years from now or something, like 2-3 field seasons. Maybe it will be obvious that they have 4 or 5 million ounces. Maybe they've hit at some other targets as well. So we're talking at that point in time, we're maybe thinking, if we read the chat at that point in time, we might be sitting at a resource of like 3 to 5 million ounces, and there's talk, hey, is this 10 million ounce district or more? And 2 years earlier, or 2-3 field seasons earlier, it cost 70 million, and obviously not pricing in anywhere close to a mine. And let's say we go into a higher sentiment environment where blue sky, actually you get paid for blue sky potential, and you get paid for the actual banked success. So it's like, what is like 5 million ounces of what I would think is a pretty high margin gold worth in British Columbia underground. I don't know, $500 to $1 billion at least, maybe up to $1.5 billion, and then add the blue sky potential. So I don't know. I mean, I wouldn't be too surprised of having a 10 to 20 bagger in Goliath Resources within 2-3 field seasons. Actually, that kind of assumes that the sentiment will have turned around by then. But yeah, that's the thing. It's like, if there's no way to make big money if you can't buy stories like these at 70 million, because the whole idea is that you pay cheap for the future you see happening. So if sentiment was red hot right now, maybe Goliath would be trading at 200-300 million or something, and you would hope to get a 2-3 bagger, whereas from this price point at this depressed sentiment, maybe there's a fairly good shot of actually getting a 10 bagger, maybe even 30% chance of getting a 20 bagger at the next sentiment high. So I mean, the wealth in this sector is created at lows, or sown at lows. This is where you reap. So imagine in 2-3 years we might be back up to a high sentiment environment. Maybe gold is at, I don't know, $3,000, and Goliath has around 5 million ounces that looks probable, and blue sky for 10 million ounces. What do you think that's going to trade in a hot market? Over $1 billion, I would say easily. But that's no guarantee, but that's the whole point. If there's a 50% chance of that happening, this is absurdly cheap. If there's a 30% chance of that happening, this is absurdly cheap. How do you really, what's the worst case scenario? They all of a sudden, the sure bet zone and all that, they just, everything they've hit so far that's it. They don't hit anything more. They never reach even 2 million ounces threshold or something like that. Metallurgy is the worst, and gold is at $1,000 or something. No, the risks on these are to the upside, and and given the characteristics of this case, meaning that it's cheap, probable growth, tier 1 jurisdiction, underground, metallurgy looks good, incredible blue sky potential. I expect this to grow and grow. I mean, it's been a rocky, rocky times lately, but that's the thing. This is our performance. This is what the average junior has done. So people might complain about it, but the fact of the matter is that Goliath has been outperforming just by staying flat, because value has been going up like this, so the price to value gap has increased. So that's why value has been increasing enough to keep the price flat in maybe the worst bear market since 2015. That's huge outperformance. So you can imagine if it does this in the worst bear market, what would happen when the next bull comes around. That's what we all should be preparing for. So yeah, just a no-brainer hodl portfolio candidate. Trigon Metals, Trigon restores concentrate production at Combat Mine. Announces full restart of the milling and processing at the Combat Mine. The company has succeeded in restoring copper concentrate production at Combat Mine in Namibia, placing the project on track to meet commercial production targets by the end of September. So that's closing in. bad part timing wise is that, I mean, copper has taken a bit of a hit lately, but as most people know, if there's one metal that appears to have a very bright future, it is copper long term. So if they can get, if they can get the Trigon mine up and running, I mean, they have a pretty impressive growth profile, as you can see. So I mean, who knows what copper will be trading at? But let's say they get through upstart, and copper prices don't stay this low for too long that it creates a big problem. Then we can just, fast forward in time, and obviously the better sentiment is, the more forward looking it will be. So whereas now it's priced like crap, 37 million Canadian. I mean, the case is pretty obvious. Let's say as supply demand gets increasingly more favorable with time, that's what the projections show at least. So let's say copper is up at, I don't know, $4 or $5 by, I was gonna say 25. I mean, it might turn around at any point in time. I mean, we're definitely talking 10-20 bagger potential over the next few years, I think. Is that a guarantee? No, of course it's not. But it's like, look here, for example, cash operating costs. I mean, you have a growth profile that goes like this. You have a expected cost curve that goes like this. So obviously, if this works out, and with some help from copper, and they have other projects as well. So it's like, yeah, one of those stories where it's like, hey, if only this one works out, I can see 10 to 20 bagger over the next few years. Okay, that would in that case pay for 10 to 20 similarly sized positions going to zero. That's the thing. It's like, do I need Trigon to reach base case or blue sky? Nope. Do I need Goliath to reach base case or blue sky? Nope. Do I need Western Alaska to reach base case or blue sky? No. But over the 3 years, if one of the three does that, that's going to pay for more than the other ones combined. And the only way to take full advantage of that, but that's time held. Because now it might be whichever story you want to pick. Is like, 2-3 years, we're 2-3 years from whatever, this kind of stuff potentially happening, and this stuff potentially happening. Yeah, okay, that's true. And a lot of people are like, I don't want to wait that long. I'm gonna, be in something else, for example. I mean, that is where you get those big returns. You can't jump in here like 2-3 years later and this stuff is playing out, because Trigon is not going to be at 37 million in that case. Might be up at, I don't know, 150 million already. So yeah, okay, you might get a 2 bag or whatever, but it's like for these to pay, the point is you get paid for time held, if you know what I mean. Yes, if you're willing to hold something for 2-3 years, because you can wait for 2-3 years and then buy, but then you miss the whole revaluation from today. That's why it's like you have growth stories that are even getting paid in a shitty market like this, like Snowline. The longer you would have held Snowline, the more money you would have made, because the case has incrementally been playing out in a favorable way, and you actually got rewarded for it. Whereas some other stocks like Goliath and Western Alaska, who's making progress, but you don't get paid for it yet. But still, those are the ones that probably have a potentially more violent revaluation than Snowline, because in Snowline you're kind of getting paid while success is taking place, whereas Goliath and Western Alaska, I would say, is more back end loaded, where it's like success has happened and incrementally is happening, but you haven't gotten paid for it yet. So I guess again, I think those are more back end loaded, meaning that okay, where Snowline has gone up like this in growth, price has gone gone like this up, whereas Western Alaska and Goliath has gone like maybe this in growth, but the share price has lagged. So I mean, then you're kind of waiting for the the how should I put it? Well, this is Trigon. Western Alaska, for example. Okay, let's say value has gone like this. So sooner or later, it's like price is going to catch up to value, and hopefully value just keeps increasing. So you could basically do nothing for 2-3 years and come back and see, hey, okay, it actually did play out, and now I'm sitting at a 5 to 15 bagger, and then it is paid for everything. And who knows, maybe you sit on Trigon for 2-3 years, and let's say this plays out and copper doesn't the copper is not in the shitters, like, oh, okay, I made 5 to 15 bags on that one as well. I mean, that's how you do it. That's why your portfolio is always supposed to have the best yet to come. So when people complain about oh, my stocks are so cheap, they've gone down, they're so cheap, they've gone down, the market is depressed. That's the whole point. If it was the other way around, that everything has been great, everything has been priced in, the future of your portfolio doesn't look that good in that case, because the best has happened. You want always, at any point in time, you want to see that, hey, from this point in my portfolio where my holdings are priced at whatever, that is probably going to look very cheap in 2-3 years, or maybe 6 to 12 months, whatever. So it's always supposed kinda to feel a bit shitty in the now, and it's always supposed to be that the best is yet to come. And in the sector overall, that for sure is the case. Magna Mining defines a thick high-grade nickel core in the 101 footwall zone at Green Hill Pro. I mean, just absurd. 3% nickel over 31.6 meters, 4.2% nickel over 27.6 meters, and copper and platinum, palladium, but mostly nickel. I read a research report suggesting that this, high-grade nickel core in one of the zones might be gross metal value of like 30 million US, just based on the nickel itself, and then you have the other metals on top of that, and who knows, maybe, I'm not 100% sure, but maybe, let's say these actually cover most of the mining and processing costs. I mean, then it's like almost all the nickel is just pure profits, pure cash flow. So I mean, if it's quote just 20 million, what's that, like, let's say 27 million Canadian, that's what is that, like almost 1/4 of the market cap, around 1/4 of the market cap. What happened to Magna? I don't think it changed in price at all. So again, that's just a case where value is climbing, but price does not, which means that the future gets brighter and brighter, because there's more catch up to do. And on that note, there was 2 research reports. One was from SCP Equity Research. They hiked the price target to $1.6. And I think there was one recently after the results that hiked it to $3, and it's at 66 cents. And just taking from some of the numbers in the SCP report, they put Magna's net asset value at I don't know how much it was, 860 million or something. So I just used a fully diluted net asset value, would put us at $3.93 per share in net asset value right now, and 0.4 of that, which is what they used as price target. I mean, it's just a pure guesstimate, because it sounds silly to say, oh, it should be up here for example, because people don't believe it, if you know what I mean. They don't believe that something can be that cheap, so they just, put, I guess, an arbitrary 0.4x net asset value, so then the target price is 1.6, but the other report put it at $3, which is up here, which is hundreds of percent higher. And of course, this is the beauty, where it's like, okay, I talked about Goliath and Western Alaska. Are they cheap? I think they're very cheap based on what I think is going to happen over the 2-3 years. But there's still an if component there. There are no guarantees that Western Alaska will find whatever, prove up last hurrah and all of a sudden it's undervalued by a factor of 10 or something like that. Or that they prove, in time prove that that's a huge CRD systems like tens of millions of tons and it's worth at least a couple of billions of dollars and you get a, 20-30 bagger in time in that one. Or the same with Goliath. There's no guarantee that it will be like 3 to 5 million ounces at least, and then blue sky up towards 10 million ounces. So there's an if component there. They need to prove that, if you know what I mean. And if they do, you might get absolutely insane returns over the next few years. In Magna's case, it's like, this is probably what they already have. So it's not they don't really need to prove anything. It's just based on what they have. And I'm pretty sure, I think, which is the crazy part, I think that this does not even account for anything of the Magna drilling that's been done. And Magna has put out some of the best, sure, it's mostly infill and around that stuff, but they're opening up new zones. I mean, this latest news release, if that adds 27 million, then obviously the net asset value is even higher. And all the other previous drilling would put it even higher, so that's not even included. So that is why I especially like Magna, because here it's one of those cases where it's like, take Western Alaska, whatever. That's like, you have maybe, let's say you have half a bird, and the same goes for Goliath. Let's say you have half a bird in the hand, but you have 10 plus birds in the bush. In Magna's case, you have like 5 birds in the hand, and maybe, I don't know, I mean, according to this, it's even more than 5 bags in the birds in the hand. But that's the thing. It's like, this is upside that should be happening just based on what's already there. They don't need to drill anything. They don't need to discover anything in addition to this. But on paper, at face value, this is where the magnet is. Western Alaska and Goliath obviously needs to prove that this is where the magnet is, the value magnet. Meaning that when the market becomes a weighing machine again, this is where price is going to head. In Magna's case, that's already kind of in place. So you have that kind of margin of safety. Because if somebody asks me, what's the downside of Magna? I would say, right now, there is no downside in Magna. But what I mean by that is not that price can't go down or whatever. It's that if price goes down, it's just going to go up later. Based on everything we know now. But, stuff could change. A meteor could hit Sudbury again, or that nickel prices go to $4 when they're trying to get into production and they have a huge amount of debt, whatever. But these are probably the best operators. You can't ask for a better team to do this either. So at face value, if somebody asks me, what's the risk in Magna? Right now there is no risk, because nothing really can go wrong. I mean, it's hard to put it like, I don't know if I explain it correctly, but again, right now at face value, they already have something that should have them the price up somewhere around here. In Western Alaska's and Goliath's case, it's that I think they will there's a good chance that they will prove by asking questions with the drill bit that they will someday we will get answers and prove that prices should be up here or even higher, given that they have a lot of growth ahead of them. So it's like, incrementally the fair value just get ratcheted up. In Magna's case, one could say it's already up here, and then they can also prove it more. So that's why I like Magna even more. I mean, I think this might still be the cheapest story I've ever seen, based on how de-risked it is. I don't know, right now I don't know a single company with more margin of safety than Magna. It is so obviously undervalued. So let's put it like this. This is probably the stock I would be the most surprised to be down on in the next few years. That's why I have, big exposure. It's the largest holding of the HODL portfolio. Because I see making money on Magna as a when and not if question. Whereas a lot of the other ones may or may not go up 5 to 15 times over the next few years. But they will have to ask some questions where there are no guarantees of what the answers are. And yes, once Magna tries to, get into production, etc., there will be questions asked, etc., etc. But we're not there yet. And given the track record of the management team, there's a high likelihood of them getting favorable answers to the question, can they get into production? Are they able to? Yada, yada. So I think, and again, since this is a depressed market, the returns are asymmetrical. It's like if they make it work and, over the long term, when the actual market participants get their heads out of their asses and actually starts, I was going to say, to become rational again, then we're not talking like, if the Magna case plays out, I'll double my money. If it doesn't play out, I'll lose 100%. No, if it plays out, I expect to make multiples on Magna. Like what Jason Jessup has said himself. He's like, what did he say? I'm not selling a share until Magna reaches $1 billion. Is that a guarantee? No, but it speaks something to, what he thinks it's worth. And again, this was SCP Equity Research's net asset value estimation without any Magna drilling, without any more exploration success, without finding the extension of the footwall zones, without acquiring another asset. So if we include this, like the recent zone, for example, maybe the net asset value is actually closer to 1 billion right now, which Jason said, well, I'm not selling a share under 1 billion. And he's also said in interviews he thinks there's enough opportunities within Sudbury alone to have Magna become a multi-mine producer in the next 3 to 5 years and have a market cap of, let's say, I think he said something like, to build a $2-3 billion enterprise. So that's the thing. If Magna alone plays out the way I hope, and if I would keep all my shares, I'm not saying I will, I'm saying if I did, that could double my portfolio alone. The HODL portfolios could double alone. On just Magna, out of all companies, just Magna playing out. And then you have stuff like Goliath. It's like, hey, if this plays out, I'll probably get a 5 to 15 bagger over the next 2-3 years. Oh, okay. Maybe that adds, 30, 40, 50% to the portfolio. What if Western Alaska plays out? What if any of the other ones with those kind of asymmetrical risk reward, where it's like, if it goes well, you'll make 5 to 15 times on your money. If they don't work out, they'll go down 50 to 100%. So it becomes pretty obvious, why I like the high risk, high reward shotgun approach. Let's say you have a 5% position. If that gets cut in, 5% in a junior is quite a lot. Most people, when you listen to them, they say like have 10% in your portfolio in juniors. That doesn't make any sense to me. Why would I have 50% in Barrick and Newmont, where it's like, yeah, they are expected to have a steady production profile over the next 5 years. So it's like you kind of need gold to do well, otherwise you won't really make any money, and anything can go wrong with a mine or jurisdictions or whatever. But to get back to my point, let's say, okay, you have a 5% position in, like, take Magna. Okay, within 2-3 years, I expect value to be even higher than, net asset value. Right now, 3.93. Is there a guarantee? No, but that's not the point, because the point is that if there's even a relatively good possibility of that happening, if it happens, you can see the discrepancy between price and target price, if you know what I mean. If this has a 30% chance of happening, Magna is incredibly undervalued. Well, okay, let's say you have a 5% position. If it gets cut in half, you lose 2.5% of your portfolio. Okay, if it goes down 100%, you obviously lose 5%. Okay, that's not a killer, but it would suck a bit. Okay, if a case like Magna, it's like, okay, you know what you think it's worth, you know that what you think where the magnet is, where when the market becomes a weighing machine again over the long term, let's say 2-3 years, you think this is the start and we're already higher, but it's going to go even higher than that. But let's just say, okay, a 10 bagger. Okay, 10 bagger. That would add 45% to your portfolio from this position alone. That would pay for 9 other similar sized positions that went to zero. And I don't think that's going to happen. So that's why I love this sector. I love this market. I love the prices we're seeing right now, because thanks to prices being down here, the ones that become successes will pay off in an incredible way, I think. If we were up here in sentiment and Magna would be already trading at 300-400 million, maybe if your case Blue Sky plays out, well, okay, this should probably be higher anyway, but to make my points, like, okay, Magna is at 300-400 million, Blue Sky kind of plays out, you get a 3 to 5 bagger until, sentiment worsens and even, proven success gets a discount. Yeah, okay, that might end up with you making a multi-bagger. From these levels, if the same success happens and the starting price is here, again, we might be talking 10, 15, 20 times on your money. So up here, if Magna was at 300-400 million, if Magna becomes the success, it looks like it could be, it would pay for maybe, let's say, 4 or 5 other stories that went to zero. Down here, it might pay for 15 stories that went to zero over the next few years. So what should be obvious is that your hit rate, you can afford to be wrong a lot more if you buy juniors in this environment than up here. Here, maybe 1 or 2 or 3 success stories out of 20 will pay for every single other story and then some, if you actually held all the shares. Up here, maybe even with a few of them becoming Blue Sky, you might be down. When we go from a high sentiment to low sentiment. Yeah, and I would recommend just reading this report. That's the thing, and it's like I get crazy as people. I mean, look at what's there. And it's like, why is Magna cheap? Well, I guess because everybody's scared of the Philippines and Indonesian supply and yada yada yada. We're going into a soft landing in China and whatever. It's like, that doesn't change the fact that Magna is the most advanced junior in all of North America when it comes to nickel, copper and PGMs. Wherever nickel is trading, Magna will still be the most advanced one. So what's the worst case scenario? That nickel stays cheap forever? Or yada yada yada. And the thing is, like, yeah, the EV revolution is expected to add huge amount of demand for nickel. But even without the EV revolution, majority of the nickel already goes to stainless steel and stuff like that. And yeah, we might have a recession, yada. What do typically states and do in recession, whatever? I mean, they spend their way out of it. It's like, what's the US thing? Green New Deal or whatever. And like China used to like to whatever. They like to stimulate, and they have their housing bubbles and all of that. It's like, okay, maybe I was going to say a lot of that is behind us. Who knows? But the thing is, if it really goes to shit, everything, and they're not able to, the governments of the world are not able to print or spend their way out of, to get demand up and going, whatever. Okay, let's say that happens and things really go bad. What's going to happen to your gold juniors in that case? They might be up 30 times. That's what I love about, it's like, have a bit of everything and buy them dirt cheap. If nickel is not going to die, Magna should. I think there's a high likelihood that Magna becomes a multi-bagger, maybe a 10-bagger of the next few years. Okay? If everything goes to shit, I think some of the gold stocks will reach heights you couldn't dream of. Okay. If everything stays the same or whatever, I think I'm going to get multi-baggers in a lot of ones anyway. So it's like, you're setting yourself up to, it's like, regardless where the macro takes us, kinda, something's going to work out. Because like I showed, I mean, if nickel does well and the EV revolution continues, I expect Magna to pay for a lot of other stories. So let's say silver keeps being in the shitter. Maybe I lose money for a time on my silver plays, but maybe Magna pays for all of that and more. That's the kind of stuff. So if you just see it from a long-term future, if you just buy a bunch of cheap stuff and you have some exposure to a bit of everything, some commodity is going to be performing, some sentiment will be okay, etc., etc. If everything goes to shit, gold will have exploded. If things just keep on prodding on and you have EV revolution keeps going, nickel prices might be up or stay flat or whatever, at least flat, or maybe be up a lot. Who knows? I mean, we saw what happened with the short squeeze, for example. And maybe they get stricter on, like, yeah, we want environmental friendly nickel. Oh, we need to secure nickel supply in North America because the Chinese are pissed at us now, so that we don't even get anything from Indonesia or whatever. And they throw out cut off the supply to the West or partnerships. There's a lot of stuff that can go wrong, and there's not a lot of, I mean, again, it's like, well, I was going to say it's almost up to Magna. If there was some shock, it's like, where's any near-term supply going to come from in the West? It's like, yeah, Magna is the most advanced North American junior, which could actually quite soon be in production, and they have a where is it? Oh, it's like here, M&A, Green Hill accreted to majors already, and they show, the downtrend of production in the Sudbury area. Well, yeah, of course, Green Hill happens to be in the Sudbury. So you have two big hungry mills here, and declining production. And like here you have it. Okay, maybe I use 760 million. I don't remember. But just read this. Like, okay, using our model average of 152 million EBITDA and taking on majors 5 times EV EBITDA puts Magna at 700 million EV versus current 79 million fully diluted EV. And that's ahead of PFS optimization, inclusion of recent high-grade hits, asset growth, and discoveries. Again, most junior, I mean, this is why this is such a deep value play. Most juniors that I think are very cheap and could do really well. They have mostly stuff like this. You know, there's a requirements like something needs to go right if get better, etc. This is what they put the value at. What you already have. So these are the if-when scenarios, which would add even more to this, but this is basically the bird in the hand. That's almost 10 times what you already have. So, well, one could say Magna has, at face value, 10 birds in the hand, and they might have, 10 more in the bush or whatever. That's why, I mean, it's so ridiculous. I mean, that's why I don't understand. Like, how can you really say this sector is hard? You should not be able to even see cases like this. These should not be available to anyone. You should have to be, to have such asymmetrical bets, you would have to be an inside trader or anything, or something like that. This is in plain sight. Everything here makes sense. Anybody can take advantage of it. No one does. And that's why we have a sector that is down here. And why the people who actually realize that always end up making a shit ton of money when the sector gets going again. When people realize that, oh crap, right. I mean, a cyclical sector is cyclical. Yeah. Anyway. So consider me biased. I own shares of all companies mentioned. I think actually every single one is a sponsor as well. So make up your own mind. I can't guarantee. It's like I like to see it. I can't. Well, I can almost guarantee, at least in my view, if I think something is a buy and what a degree of buy it is. But I cannot guarantee what I will actually end up making money on, because anything can happen. But if you stack your portfolio with a bunch of stuff that is like, this could easily go up 5 times, could actually go up 15 to 20. You don't need to be look right on many, because every single one of those that actually end up working out the way you hope, they will pay for numerous ones which could actually have been very good buys, but for whatever reason the case didn't play out. We're not in the business of certainties. We're in the business of risk reward. So make up your own mind decisions. I don't share your profits or your losses, etc., etc. Not investing advice. Bye.